Buy now, pay later. Company Klarna pricing its IPO at $40 a share, above its expected range. Values the Swedish company at about $15 billion. This comes as recent IPOs like Figma and Bullish are significantly higher, but well off their highs, despite the initial demand. Join us now, Matthew Kennedy, senior strategist at Renaissance Capital. 40. Let's just cut to the chase. What would surprise you? Would 60 surprise you, or are you expecting a more muted debut?
Yeah, I mean, you can never really tell. Looking at Figma last month, it really surprised us all. So I think with this company at the offer price, it really leaves some room for upside. How much above that? I mean, we're looking at closest comp Affirm, the other buy now, pay later company. So that really does give us a ceiling on the valuation for where it should trade, and we'll see if it does.
Affirm has higher margins. I got that right? Why?
It's more focused on the U.S. market. Klarna is more international. So international markets have weaker margins, but Klarna is trying to break into the U.S. market more and expand there.
It had a $46 billion valuation. Would have been a good time to go public then, obviously. Does that mean, since the revenue is actually higher than in 2021, can you just say, all right, it was 46 then, it's being valued at 15 now, it's worth a lot more, or was it just totally overvalued during the pandemic?
Simple answer, totally overvalued. SoftBank actually led that $45 billion round. So I think investors are not paying too much attention to the 2021 excesses.
Why is the window so wide open now on IPOs? We're in the markets are at new highs, obviously. The VIX is low. Interest rates look like, the 10-year has been coming down, but it looks like the Fed might start cutting rates. Are all these things bullish? What else is bullish for IPOs now?
Right. I mean, the simple answer is supply and demand. This has been a building pipeline a long time coming. After a 3-year bottleneck in the IPO market, the VC-backed tech group has really been swelling with unicorns, and they're now ready to go public. And at the same time, on the demand side, investors are finally willing to pay at least valuations that the VC-backed tech companies can accept. So there's a meeting in the middle, and as you said, the VIX is low, interest rates are headed down, the IPO index is at a 3-year high. So a lot of things moving in the right direction there. Recent pops, I think, are fueling some of the excitement as well.
Matt, do you know that before things happen and behind closed doors, do they talk about whether they want to take, get as much as they can as the money they raise on the offering price, or do they want to hold it back and have it, open much higher so the whole company's valued it more? We've had this discussion over the years on Squawk Box. I mean, if you price something at 40 and it opens at 80, it seems like you left all that money on the table that you were trying to raise.
Right. It's a delicate balancing act that the underwriters have to pull off. A lot of competing interests here from both the investors, the company. Now, I think a lot of people said that when Figma went public, popped 250%. Oh, they underpriced the deal so much. Since then, it's come back significantly. So I think you do have to be careful. There are other factors at play here. A lot of short-term traders that are trying to ride a quick rally. Gets a lot of excitement. You never know what these deals are going to be worth. But then as the trading goes on, you get some more volume. I think that's really where the rubber meets the road down the road.
I mean, as an underwriter, would you want it priced at 40 to open at 41 and be at between 40 and 41 6 months from now? Is that the perfect way to price an IPO?
Absolutely not. I don't
think so.
Yeah, you want to see some more upside there. And Figma, for what it's worth, did generate a lot of excitement. A lot of people learned about the company. And, you have to keep in mind, these IPOs are a big marketing event. So this might be the first time that some people are learning about the company Klarna. So, you want to build in enough upside, enough excitement to really get the investors' attention, earn their trust. And that really does pay off over time, too.